Good morning, guys. It is Tuesday, December 12th, 2023. This is Bathrobe Business. I got my coffee. Let's jump into the news. So it's been a very volatile morning. So strangely enough, when I started research, I usually start doing research for this video last night, the night before, and then I try to go in early morning to get the freshest data. So in just the last 15 minutes, I think the story has changed 3 different times. So we were waiting for CPI numbers to come out. But prior to CPI numbers, there was a story that said that the Fed is going to start cutting interest rates mid-year in 2024 with a high chance of a soft landing, no recession, et cetera, et cetera. So this was an article on CNBC. It's still up there, although you have to kind of dig for it. They were saying that most people surveyed believe that the Fed is going to cut rates. I am still adamant about the fact that I don't think they will. I do not see any reason for the Fed to be cutting rates, given the fact that you cut rates as stimulus. If everything is going as planned, there is no reason to cut rates. And we saw job numbers just a few weeks ago that showed very strong economic growth. If you've got strong economic growth, and Jerome Powell seems to be triggered specifically by job growth, which makes sense, that's a powerful underlying inflationary pressure, because things like CPI, pricing, those don't necessarily dictate pricing as much as jobs. CPI can be manipulated. Gains in productivity can change how much a product is sold on the market, oversupply, etc. But jobs are huge, and he seems to be reacting. Every time there's strong jobs data, he starts to raise. So in that time, while I was doing this research, there was breaking news that the CPI number has in fact come out. The number has actually changed several times since I've started doing the research, because as breaking news comes out, different outlets are reporting different things. So here is the latest number. Hopefully it's unrevised. I'm going to read it. I'm actually going to go off of Bloomberg's numbers because I feel like they are the more accurate numbers to go off of. So I'm going to read this article more or less verbatim. Actually, you know what? I am going to switch back to CNBC right now. So, consumer prices rose 0.1% in November from the prior month. So, CPI, this does not include oil, this does not include housing. So, cost of gas, cost of housing is not included, which you could say is a massive underlier of inflation. But because those are not necessarily, housing cannot be included day to day, because usually those are fixed costs that happen like mortgages, rents, leases, that last for large periods of time, so they can't be accounted for into CPI data. But honestly, it should be. But the Consumer Price Index, a closely watched inflation gauge, increased by 0.1% in November and was up 3.1% from a year ago. So November to November of last year, we are up 3.1%. There were some articles I found earlier this morning, just when I say earlier this morning, like 5 minutes ago, that said it was closer to 4%. So these are the latest numbers. The Labor Department reported Tuesday, economists surveyed by Dow Jones have been looking for no gain and a yearly rate of 3.1%. So we pretty much came in at estimates, which is good. However, here's my argument. That is still well above where the Fed wants it. Again, this does not include energy and housing. But if you were to include housing, rents are still up. And if inflation numbers are at 3.1%, their target is 2%. That's still 1.1% up from where it should be. Jobs are still incredibly strong. And if you factor in leases, rents, mortgages, inflation is still very high. I do not understand where people are coming from. I think it's completely wishful thinking. I think this is no different than when people were saying inflation is transient, that there is going to be a rate cut. There is not going to be a rate cut in June, unless all of a sudden these numbers start to dip. This is still very high inflation. You're still talking 3%. Remember, we're talking year-to-year inflation. So a year ago, I'm going to pull up this number. A year ago, inflation was 4%. So November 2022 to November 2021, inflation was 4%. This year, it's 3.1%. That means inflation has been up 7% from 2021. That's still massively high. We're not even talking about deflation. We're just talking about straight inflation. This is simple arithmetic. Inflation is up 7% from 2021. And people think that the Fed is going to cut interest rates. Why? That's still incredibly high. So I don't see this happening anytime soon, especially with the strong job numbers we saw just a couple weeks ago. Jobs came in overestimated. This is a breaking story. It's an ongoing story. Like I said, a lot of this has changed literally like within 5 minutes of me doing this video. But I think it's something to really think about, that this isn't necessarily a good number. That's pretty much all I'm going to say about the story. There's still a lot of data coming out. I would recommend going to Bloomberg because there's a lot of micro updates that they do on their website. So just go to Bloomberg.com, and it talks about little differences and little nuances to those numbers. Like, for example, right now it's saying housing cost gains offset decline in energy prices. So again, housing is up. So even though energy is declining, the cost of housing is up. So what are you actually doing? You're just breaking even. So, and it's got these great little stories that are updating the story as we speak. For example, as of 3 minutes ago, shelter costs continue to pressure the CPI index upward. It is the largest component of the basket. Economists have been in a waiting game. And it updated again right now, with expectations that the index will start to cool and drive overall CPI down. But that's not happening yet. So yeah, go to Bloomberg.com. There's some great stories on there about CPI, and I think honestly, Bloomberg is a little bit more bearish. I think that CNBC is always more bullish. I mean, CNBC is the news from CNBC is always questionable, right? But I think it does represent a large majority of what the market believes. But again, I do not see that number moving. Next story I'm going to talk about real quick is Oracle. This is kind of a smaller story, but Oracle revenue was down $12.94 billion versus an estimated $13.05 billion. Why I think that's important? I think this is going to signal more cuts. Today there was also an announcement that Hasbro was cutting jobs again. I guess I shouldn't say again because I think this is their first. I think this is their first downsizing, but I think it's an overall trend that's going to continue because oftentimes when companies will cut, that is a signal to the market that they're making the necessary adjustments to the economy, and that signals a higher share price. So I don't know for sure, but I think Oracle is probably going to cut more jobs into the market. I think that's one of the ways that they're going to gain in stock price. Ford F-150 Lightning production is going to be cut in half. So Ford has announced it will cut planned production of its electric F-150 by almost half for next year. Sales are down, and also interest rates are high. So obviously this is a car that's more expensive than the standard Ford F-150. There's questions on demand, but I think a large driver of that is also the financing cost right now. So we will see what happens with that. Last story is a little bit interesting, and I have to get going because I'm actually running late for work. But this is an interesting story, and I know I watch my videos oftentimes, and you'll notice I say interesting a lot, which I'm trying to fix. I'm trying to avoid that, get a better vocabulary. But this is an interesting story. So Epic Games has won an antitrust lawsuit from Google over barriers in its Android App Store, the Play Store. So this is a kind of a major turning point, potentially, for Google and Apple and their so-called duopoly. What is really interesting about this is Google actually does allow other apps to be downloaded outside of their Play Store. Apple does not. So I'm an Apple user. If I wanted to download an app, I have to go through the App Store. Google does allow for other companies to download from other sources. But this lawsuit essentially said that Google participated in antitrust actions that limited Epic Games, that forced them to go through their store, where, of course, they're taking a massive cut. So the big question is, if Google, which is more open than Apple, is getting sued for antitrust violations, what is going to happen with Apple? So far, I don't know of anything that's being brought against Apple as a lawsuit. But this definitely sets a precedent that if Google can be held accountable, that Apple should be held accountable. I think that would be great. I think that it is, if you actually look at how much Apple charges for their App Store, it's 30%. That's insane. For developers, that is huge. So if it were allowed, to download apps outside of the App Store, it would be a huge dig into Apple's profits, because I think that's going to be a massive, massive amount that they make every year just from the App Store. But it would also help developers a ton. It would also allow more apps to be on the market, more apps to be on the Apple Store. Apple is going to argue that this is one of the ways that they protect consumers and quality, but I think this would be a major turning point for developers. We'll see if anything comes of it. Like I said, so far I don't know of any lawsuits against Apple, but at least now there is a precedent that has been set. That's it. That's the last story of the day. Like I said, keep watching housing and keep watching CPI. So I'm saying no Fed cuts in 2024. We will see if I will eat those words. I'll see you guys tomorrow. Have a great day. And yeah, see you in the morning.